Hello traders, Gary Wagner here. It is 1240 in Honolulu, 540 in New York on Thursday, 19th day of December 2024, and this is the evening report for gold and silver. Never a dull moment when it comes to politics as well as the Federal Reserve in the United States. Gold continued to trade under pressure today after a dramatic shift in the Federal Reserve's monetary policy was announced yesterday. At the same time, the government is once again about to run out of money. President-elect Donald Trump announced a potential bill regarding the government shutdown, but also added that he is also proposing an abolishment of the debt ceiling, a hard sell at best. Gold futures space is the most active February contract, closed under pressure yesterday, down almost $64, closing at $2,599.60. Today we saw a potential recovery, with gold opening at $2,600.60 and closing at $2,610 after factoring in a net gain today of $10.40. That means there is potential support at the current lows. Although gold did not move up that high, it only made a slightly lower low on the day. That being said, gold did trade to a high today that was unsustainable, right around $2,640. Yesterday's closing price as well as today's opening price, right at around $2,600. When we look at historical data, the only thing it roughly matches to are these series of lows that came in the middle of September and an area of resistance towards the middle to the end of August. I still believe that major support is below that at $2,550. When we convert our Japanese candlestick chart into a Henkin Ashi chart, you can see that body size is still relatively large, and we're still seeing on this daily chart the absence of the upper wick, which means that at no point during the trading session did gold prices trade to or above the midpoint of the prior day. Considering that gold traded to a high just above $2,800 at the end of October, and yesterday's close as well as today's open came in right around $2,600, that is $200 to the downside, which is a more than acceptable correction in terms of the percentage based upon the recent move to the upside. Gold is now trading overseas in Australia, up a couple of ticks from New York's close. While this could be potentially an excellent entry point, we need a little bit more data or time to confirm that a solid bottom and support is actually in place and that gold will begin to trade higher from the lows we saw yesterday and the open today. The caveat to that statement is the fact that gold only recovered in a most modest aspect, and we have to factor in dollar strength or weakness. The dollar has been exceedingly strong, and therefore it would limit any kind of upside move and could lead to more selling pressure ahead. In other words, it is too early to make that distinction whatsoever. And traders, the key with the dollar, I've just pulled up a daily dollar chart, is we have seen it move from just about 100 to above 108, meaning an 8% increase in value against the basket of currencies it traded against. And most importantly, when we look at the basic technical indicators in the dollar, yesterday the dollar traded right up to a key critical level of resistance. It's based on this top that occurred in the middle of October, as well as this top that occurred in April 2024. We are looking at a weekly chart. It tore through this particular price point at about 107 and closed a percentage above that because of the fact that the dollar opened this week just at this key resistance point right around 107 and closed a percentage above that, means that momentum to the upside continues to be the overall trend of recent dollar activity. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.